Welcome to the StockMiner.com studios. I'm your StockMiner Brian Johnson. We had a down day by the end of it today. Pretty uniform too. A little move down to start the day, and then a little pullback. It ended up being kind of a bear flag if you guys were watching that. And then another drop at the end of the day. Still chopping sideways though, bigger picture though, guys. Now we did hold this area up in here. I told you there'd be a lot of overhead resistance. Sure enough, that's what we're finding, not once, but now twice up here at this 10,300-ish area. So we want to be watching that very closely if and when there's another retest of that. To the downside, nothing broke down here. So if you were waiting for that move back below about the 10,100 area, we still have not got that yet. Now, in order for the Bears to really take charge, and I mean to really push things, not only for the next few days, but for the next, week or few weeks, they've got to claim the 10,100 and ultimately the 10,000 mark before they can start really cheering. Now, will that happen tomorrow? It's very possible. Maybe we see the best way to beat this kind of stuff is to gap. So maybe we see a gap down in the morning that kind of gets below all of this stuff. And if that's the case, then that could mean a very good scenario for those that are bearish in through this area. Sorry, not bullish, bearish in through this area. What we tapped today was that 50-day moving average. Can you see that here? 10,302.36. was the 50. High of the day, 10,304.70. So within just a couple of points on the Dow, which is nothing. That's a breath. You can see where this held very nicely today. Still moving us downward, but no really heavy selling pressure coming in here. Much to the chagrin of anybody that may be bearish out there. We are seeing a move to the downside. We're just not seeing any kind of heavy selling coming in here. So I will remain neutral to bearish short term, neutral to bearish long term, because that is what the charts are telling me. But I'm going to wait to take some more and larger short opportunities until it gets below this 10,100, ultimately 10,000 as well for more conservative. NASDAQ on the 60 broke down today. It actually got walloped. The NASDAQ did not do well again today. We've not seen much strength out of the Russells and or the NASDAQ over the past few days, and those are typically pretty strong in the markets. My subscribers, by the way, guys, my subscribers and I follow the Russells, so if you're a Russells player, that might be something worth your time. If you like the Russells, I like to follow them as well. That's one of the other indices I follow in my subscribers newsletter. But you can see the NASDAQ got beat up today, almost down 1%, while everything else was down less than 0.5%. Let's see if that makes any difference going into the next few days to see the Russells and the NASDAQ kind of suffering here lately. From a daily perspective, though, not breaking the 1800 mark. So here we are again with still some strong support for the bulls. These are areas they are absolutely going to want to hold. You can look at this candle as a bearish engulfing. I'm not going to put a lot of stock into it. I'm just waiting for this break below 1800 before I really start getting a little bit more bearish on the tech stocks themselves. Although some of them did take, I think, a wallop today, like Baidu, I don't think did so well. I'd have to look again, but it wasn't doing well earlier in the day unless it made a recovery. NASDAQ on a weekly, it's Monday. We won't worry about that. SPX on a 60-minute also having this little drop down. Notice how we came back up to test this 1080-ish level here. Really don't want you guys getting or even trying longs until we get above 1085 or 1090ish, somewhere up in this area. Ultimately 1100, guys. There's just so much going on above us right now. I'm having a hard time reconciling any kind of trades that aren't above 1100. You have to be very nimble in and out to really make any profits on a long side here. So I'm going to continue to watch these trades here. We held at 1080 very nicely. Now moving our way back down towards this 1063ish area, 1060 area, which is going to be or may be some strong support down there, depending on what we see. Now, once again, what's the best way to beat it? To gap. If we get that tomorrow, maybe that's the catalyst for the bears. So, once again, it's anybody's call down here. I can make you a bear scenario. I can make you a bull scenario. This line here is very important, and ultimately the 1050 line, I like that as well. That's more conservative. 1055 for the more aggressive, but this 1050 down here I think is a good area to look for a short potential beneath that. If we can get below that, I think you're good for 1040, and then maybe even all the way back down to this 1010 area, potentially 1020 or 1010 if we can break that 1050-ish level. From a weekly, it's Monday, won't worry about it, but notice how we're being pulled right now for one day down towards the blue line. Won't make a big deal of that. Like I said, it's only Monday. Now, the VIX was up today ever so slightly, but up enough. The market wasn't down all that much, so the VIX wasn't up all that much. That's good to see from a confirmation standpoint if you're a bear. Also good to see if you're an options guy. So if you're looking to get into some options, you want to see the VIX stay low, giving you an opportunity to buy in at a premium. From a weekly perspective, it is only Monday, but notice how we're just trapped within all this crud we've been trapped in for forever. Really, I think the fear starts to pour in once we see the VIX up and above 28 or 30. And if it continues to drop, that should mean a little bounce here in the markets, and that would give us our bullish scenario if we can see the VIX get back below about 24. Apple on a 60 was down today. Ooh, it did fall a little further, and I thought down $3.84. This was the break. We had the gap up, but it fell quickly, not showing strength at the open. Once we broke the 250 mark and ultimately 249, it was off to the races for Apple, making for a very, very tasty $3-4 trade today from the daily perspective. We are coming into a little bit of lower support here, so maybe something's starting to pan its way out. Who knows? We've been below this 20-week moving average for 2 weeks now and working on a third. This break below 240, guys, could be an omen here on Apple. That'll be one to watch very, very carefully. FAS on a 60-minute was down 33 cents today. You can see where it started. See how it moved up right into overhead resistance at the 20-period moving average here. Dropping, sideways, drop. That's precisely what we saw out of the markets. Very same type of a look. And that is to be expected. You'll see that from the financials. They typically follow what the indices do for the day in most cases, so it's not a big surprise to see this. However, I want to show you something, guys, from a TA perspective. This was beautiful from the perspective of gap up into the 20, fall down, run sideways into the 20, fall down. That's gorgeous. Just makes for a lot of opportunity, if you will, if you really know what you're watching here in the charts. Great opportunities. FAS on a daily coming back down and towards this $18 mark. So I'd be very careful. Really, at this point now, if you're not, playing this, watch it carefully down around 18. If we can break below 18, now maybe you've got something to work on for your intraday trades. The FAZ, of course, did the opposite, where it gapped down into the rising 20, moved up, sat right above $16, and then moved right up again. Now, no big plays. None of these major levels were broke down here. Nothing above $16. Nothing below the $15.75 or $16 mark. We got the gap down. I don't necessarily like to play those right away when I see them gap like that. But this thing coming right back up, giving us more opportunities potentially tomorrow, depending on the direction of the markets. Below $15.75 and or above $16.50 are your areas for you daily traders or intraday traders. Sorry to be watching that. Notice how we're starting to poke our head just above for once and closing above the 200-day moving average. I still like this trade above 1650-ish. Above 17 for the more conservative, but above 1650, I still like this trade to the long side. Tight little stop down in here and watch that thing run. I think we can make that 18 to 1825-ish area, maybe even 1850 before a stop. Sure would be nice to see a $1 to $1.50 run on one of these ETFs, these especially FAS, FAZ. These triples run very, very quickly. Good opportunities for some money. But you gotta be careful because you can lose money every bit as fast on these things. But still, good opportunities. Keep these levels in mind coming into tomorrow. Keep these other levels in mind that we're watching. Like I said, nothing really broken from a bear side here, but nothing super strong from a bear side either. And that's what's kind of got me in a quandary. So I have to remain neutral bearish. That's where we're at, but I don't see anything heavy coming in quite yet. I will be watching that over the next day or two to see if we get breaks of these lower levels that I've been talking about, especially here on the SPX, where we're looking at maybe drops below this area, maybe a hold above this area, it could go any way at this point, guys. All right, I'll be back with you regardless again tomorrow. Now, if you're at all curious about how I draw my lines, how I make my charts, and why I put my lines in the particular place, you got to look into the mentoring. It's well worth your time. It's well worth your money. Yes, it's well worth your money. Once you make back what you pay for in the mentoring, it's all gravy after that, and it's something you can take with you forever. It's something you can pass on to your kids, pass on to your family members, help organizations out. I have people that use their mentoring to help their churches out and help other community organizations out. It's a great opportunity to do that with that education. People don't have that kind of education, but more importantly, it gives you confidence. I can't tell you how important that is in your trading when you're not scared to take a trade, when you're not scared about what you're doing in the markets. It will improve and increase your profits tenfold in no time. It takes a little bit of time, takes a little bit of work, but it works. All right, be back with you again tomorrow night. Bye.